Hello, welcome back. As you can see, the stock market continues to crash today. Nasdaq 5% down again, and look at the rest of the indexes here. Yeah, it looks like we are having a bloodbath again. Now, I wanted to talk about a stock, about a company that I really like, and it looks like it's going down again today and massively down, bleeding tremendously. 18% down for Etsy. Etsy is a company that I really like, and they have a fantastic website, I think, and an application pretty much that I find very useful. And I have bought stuff from them in the past. I think they have some very nice stuff. I have even bought like paintings from people which are very talented, and I find this is a very cool store that I really want to take a look at in terms of becoming an investor at it, because it has to be making some good money, no? It has to be doing well financially. We're going to examine that, and this is what will actually make it or break it for us, of course, because just loving the company, just loving the website doesn't mean anything. We need to love the numbers as well. Now, when we're looking at Etsy here, the PE ratio of the company is sitting at 30, and it's going down. It used to be 30 back in 2017, 27 over here in 2017. Now it's sitting at almost 30, 5 years later, it looks like, after crashing tremendously again with the rest of the stock market, as you'll see here, has been having an insane downtrend as well. Now, outstanding shares that are going a little bit higher, but not tremendously higher. So 7% in 5 years. Okay, it's a little bit of an increase, but it doesn't concern me too much. Now, the price to free cash flow ratio is also going down, which I love to see as well. And the free cash flow to total liabilities ratio is slightly more than what I would like it to be, but it's probably fair. We will examine the financials in detail to see exactly what's going on there. But the 5 year revenue growth has been increasing nicely, the 5 year net income growth nicely as well, cash flow growth and total equity growth all increasing pretty nicely. Now, the net income margin of the company at 21%, pretty good as well. But look at this return on equity, very nice, really nice actually for a company like Etsy to see. I'm assuming this has to do with extra debt too, in order to be that high, and it kind of portrays that it's going to be the case by looking at this ratio here. The debt to equity ratio potentially points to more debt compared to equity, and this debt can help increase the return on equity. Now, the free cash flow to total liabilities was also a little bit elevated, can also point to some extra debt. Okay, let's take a look at the financials though, just to take a little bit more of a detailed look at what the company is doing. From 400 million in 2017 to 2.32 billion in 2021. So pretty steep increase over here, nice to see. And the net income of the company from 81 million to 500 million. Not an insane increase, but a pretty nice increase as well. Not insane in terms of absolute numbers, but if we take it to relative numbers, it's pretty great growth here. So, the balance sheet of the company, you will see that the total equity of the company has been increasing, but also has had a little bit of a slump in 2020, and so it actually fell a little bit over here back in 2020, and so 2021 was a little bit less than before. Now, if we take a look at the cash flow statement, you will see that the company has been positive in net income, which I love to see, of course. And this creates net cash provided by operating activities of 651 million here. And investing activities, a little bit of a negative value here, which is good to see. Purchasing some investments, investing activities, PPE, and some capital expenditures. Not too many, though, that's good as well. And financing activities, positive here, which means that the company is actually getting some extra debt. Kind of what we talked about earlier. This extra debt can help increase the return on equity and make it more, more interesting for potential stockholders to look at these great returns on equity. But as an investor who understands more about what these things are, you really need to understand what causes the increase in return on equity. And this can have a lot to do with debt. And as you'll see here, the company does get quite some debt to accommodate that. Now, The company has a little bit of cash as well, more than what they used to have, which is good, of course, and free cash flow that keeps increasing from 54 million to 623 million as well. Another great side to see here for the company. All right, let's take a look at our stock evaluation tool now, because I want to see what kind of price it makes sense to pay for the company, if any. So the revenue growth has been tremendous for the company here, as you'll see. Great growth every year, and it's surprising to see that 2017 was actually their worst year in terms of growth, and then they did even better. That's unusual. Usually the opposite tends to happen. But since they're doing very well, I think I'm gonna go, let's say 18, 20, and 22 here. It's probably making sense for the company of that sort. They seem to be growing tremendously nicely. And the net income margins of the company, they're sitting at similar levels, very convenient to see. This can help us with our numbers. I'm gonna go 17, 19, and 21. Free cash flow margins, similarly, you can't really go with 180 or 100, 200 or so. I want to be somewhere at around 100, 110. So I'm gonna go 100 here, 110 and 120. Over many years, this tends to normalize at probably about these values here, 110, 120 or so. These are more of the odd one out, and they tend to happen with lower net income values, for example. And as these get increased, you're for the most part tend to have free cash flow margins of about 100, 105, 110. So annual return of 13% is what I typically want to make here. And if I hit calculate, then I'm saying that Etsy is actually a very, very interesting proposition right now. Because even at our low valuation here, at our low projections, we're pretty much at the same price where the stock is at right now, or very, very close to it at least. And even if I increase the revenue growth just 1% here, 1%, then I'm pretty sure we're entering, the pretty much green levels here, even for our low estimates. So I kind of like it right here. And even though the market is crashing and it may be potentially going down even more and give us a better price, this will be in my watch list, maybe for a potential purchase if it keeps going down. Because right now it may even be a buy as it is. But I'm a little bit scared of the stock market right now, scared in the sense that I think it may go down a little bit lower and potentially giving me a better entry price. I love to see that, of course. It doesn't really scare me. But I'm scared in the sense that I wouldn't want to buy now because I think I may actually miss an even better entry point at a lower price that I feel Etsy could give us soon. So yeah, tell me what you think about Etsy. Are you a buyer? What do you think about the company? I love it, but I want to make sure that I'm gonna be making as much money as possible from it if I'm going to add some to my portfolio. Thank you for watching again. I hope you enjoyed the video. Please leave a like and subscribe, and I'll see you in the very, very next one. Thanks again. See you. Bye bye.